So this is one slide just to briefly summarize a few catchy phrases related to the retail investment strategy, which are copied from documents or information coming from the European level where this originates, be it ESMA, be it European Commission, be it a related entity. And the statement on the left is pretty much what it's a pitch line, so to speak. The idea is to put the retail investor at the core of the Capital Markets Union project. So let me just briefly rephrase it again in the context of today. This has nothing to do with AI. And it's complementary to what Jaap just said in the sense that we are moving from wealth more towards retail. But there's many opportunities, I'm sure, for the AI customer engagement that was touched upon this morning. And it also is one of the challenges or the opportunities to compensate for the lack of this new generation with wealth transfer and so on. Just try to get clients, investors, in an area where perhaps today the focus is less and or where the efficiency of digitization might be higher to be explored. So that's a bit the mission statement. They want to focus on the retail investor. And that can be in many areas. On the right-hand side, from another document, they touch upon a number of projects or applications like we want people to be better prepared for retirement. Also retail investors. It's not good to outlive your financial wealth, irrespective of how large that wealth is. They also consider this very much a vehicle to mobilize, let's say, the general public's money in support of the Green Deal. So there's lots of things, it's like an umbrella project if you wish. And yes, this is expected to translate into new regulation as of 2025, 2026, lots of lobbying going on as you may imagine. But it's there in some sort, form or shape for sure. And the idea today is to touch upon a number of opportunities as said and to share with you some use cases that we have been working on in this context. So very briefly said, what are, in our translation, the three pillars of this retail investment strategy? Well, first and foremost is indeed to increase this financial participation. And for everyone invested, the company that I'm working for, and I will position ourselves as a company later on, this is very much about getting more people invested. Much less, our current focus, much less is to get existing investors invest more. That was more the story that was brought earlier on. So we very much focus on how can we get our assets under management grow by increasing the number of investors, and equally important, keep them invested. Because having investors and making people push the buy button, very good. But as you know, it's also very easy, definitely in digital channels, to push the sell button and turn that investor in a saver again for many, many years. So both are equally important to increase this financial participation. A second important pillar of this retail investment strategy is to say, do this in a way that leverages the the technology and the means of technology these days. Again, this can be many, many ways. It can be AI-driven client engagement, can be to support the hybrid model that was discussed or presented previously. But this could also be, well, try to use the mobile app of a bank to get your investment proposition into the life of people that do not come and see your advisor, that are not like Mr. Dumont, which are perhaps younger, that claim to have no time or no interest in your investment proposition, but simply because of the fact that they carry your branch as a mobile app in their pocket, allows you perhaps to get into their world and increase this way the number of investors in your bank or in your company. Well, that's very much the focus there. And they also link to that, of course, financial well-being and digital literacy. There's also a program on that or a stream on that within the retail investment strategy. But for everyone invested, our focus in this context is really to say, how can we lever on the fact that many, many people, also the non-investors, use a banking app for their financial services? How can we slip investment services into that? And then finally, a third point of the retail investment strategy is that they want to make sure that all of this is realized with the investor protection being preserved. Easy access is one thing, but it needs to be done in a way that preserves investor protection, and that's why, of course, supervisory authorities, ESMA, and also the national authorities are very much into this in order to make sure that the regulation that comes out of this is then also complied with and so on. And for everyone invested, again, that means that our solutions and use cases that I will share with you are always easy, at least that's what we hope, and easy to use and simple to understand, but nevertheless based on this important pillar to make sure that it leads, for example, to diversified investment, or it leads to investments in a risk mitigating manner. It's not easy access to Bitcoin ETFs, for example, which is fair, okay, but not necessarily for the 100% position of this first investment. So that's the three pillars: increase in financial participation, doing so in a digital way, and making sure that investor protection is preserved. And as you may imagine, a company called everyoneINVESTED is pretty much aligned with this. That's why indeed we like to say that's what we have been preparing for. And we can show that for a fact because we are, as a company, we are the former innovation team of KBC Group, Belgium-based company, as you may know, also active in Central Europe, in some countries. And for many, many years, we were acting from within the asset management company as the innovation team dealing with investments. And literally we did so for many years, as said, and for example, also in this way contributing, and of course not being the only one, but contributing to the leading position KBC has in investments in all of its home markets, as we said. The 50% relates to the average percentage we have on the different markets as a higher investment market share compared to the banking activities market share. And that is why, and that's also one of the reasons why the organizers of today thought this was an interesting story to tell. That is why KBC decided in 2020 to put our activities in a separate company. So this is not a story about a bank buying a fintech, it's about a bank spinning out one of its departments as a new company. We are fully owned by KBC, and that's why we say a KBC Group company. But of course, the solutions that we bring to the market and the use cases I will show are from an IT point of view totally different, separate, and as a SaaS platform we offer our services. So that's the story in support of this retail investment strategy, trying to explain what we do. So what then, to position a number of our use cases and also in perspective of what we saw earlier today, we like to use this visual to say what we focus on from a strategic and a go-to-market point of view. It tends to represent the financial life of every one of us. We are all born as savers to the left, and as we grow in life, also financially, we make at some point the most important decision, which is the first investment, getting over that wall. And then as we grow in life further on, maybe some of us will ever be Mr. Dumont, having, what was it, 12 million, or 2 million euros in life. So that's the history, so to speak, of every one of us. Hopefully we are moving more and more to the right as we speak. I would like to find a combination then of getting people from left to right. Not using AI, at least not in the use cases of today, because there might of course be a very interesting role to play for AI-driven client engagement to get people over that wall. But I heard the speaker of Microsoft mentioning a number of times this morning, this is not advice, this is not advice. Because if it would be advice, then MiFID and so on kicks in, which makes it a totally different ballgame. Now that's why the challenge is always, in our case, in our applications, when we deal with investments, it's about making sure indeed that there is user convenience, first and foremost. People have to be able to go through these journeys, preferably in a digital way or in a hybrid setting. Business impact has to be there. I mean, this has to generate fee business. Investments have to be sold through your journey, be it fully digital or hybrid. And in all cases, it needs to be regulatory compliant. And to remind us of that, as an example, ESMA last year issued a guidelines repeating what is defining a financial advice, because they see more and more of these digital applications called digital engagement techniques, and how can you build a screen flow that leads people to the buy button. In some cases, it qualifies as advice. In some cases, it does not. And that was a very good, I thought, example, this paper or this guideline from ESMA being a repetition, a reminder of what is qualified as advice, to show that at some point technology and design have to comply or meet with the existing regulation. So that's why this is not necessarily exclusively a technology issue or a story, but very much also business content and regulatory compliance. Now, everyoneINVESTED, being the former innovation team of KBC, we actually originated working on the right-hand side of this slide, making tools for the KBC advisors in a augmented model, I think the term was used earlier today, to build tools so that the advisors can service the existing investors better, that they can service more investors with their given limited amount of time and so on. And with the idea to have tools that free up time for advisors to advise their clients, making sure that every time or every minute spent is on an activity where the human aspect of that advisor is adding the value to the moment, so to speak. So that's where historically or chronologically we started our expertise. That's where also still today we have some solutions, but more and more we have been shifting to the left of this slide. As I said, using then digital only solutions, that's why you have the icon there of the smartphone, by integrating in the app of partner banks, KBC and preferably also many others, to expand the reach of their investment offering. So our mission is literally to get distance digitally closer between the clients of our partner banks and the investment offering of that partner bank. This is not a story about selling KBC funds to other banks, not at all. It's really trying to contribute to a world where more people invest. So that's, again, in a simple picture, what our ambition is. And then let me share briefly, before we then go to the final panel of the day, let me share with you two use cases, which I hope you will agree are very, very simple, as an idea at least, to understand what they intend to do, but the implementation, finding this optimal balance between user convenience, business impact, and regulatory compliance, is not straightforward at all, as you may imagine. So the first one is the idea of saying, look, how can we introduce this investing into the life of everybody? Well, by trying to make sure that it is part of what they do every day, which is spending money. So it's a simple idea, if you wish, of linking investments to payments, known in many countries, also in the Netherlands, as standalone apps, which people have to download, then they have to link their account to the app, and they have to give consent every now and then for the investment. But those kind of hurdles are overcome if you can integrate that into the banking app that people already use and trust. And as a result of that, it then turned into, let's say, a payment feature. You preferably don't stress too much that it's an investment or whatever. So of course, regulatory compliant, but the framing of the offering is also crucially important. Do you consider this investment made easy? Which in essence it is, but I think if you have a background in investing, you make it needlessly complex if you look at it like that. If you look at it as payments made more valuable, then it's a totally different game. Still has to comply with MiFID, but also in our experience, getting it accepted within a conventional large retail bank like KBC, it makes a lot of a difference for the decision maker if you position it as payments made valuable rather than investment made easy. Investment made easy took us much longer, and it actually was accepted as a project once we got the people from payments involved. And what did this lead to? There's some KBC colleagues in the room who can acknowledge this is within KBC very much the example of a successful digital project or process for onboarding of new investors. A few numbers, relative numbers, because then you can relate to the market that you are in. We see that of the many, many people that activate this, a majority, more than 50%, actually it's around 60, are indeed first investors. Did not invest before. KBC actually, every beginning of the year, they have a press release, and for the last 2-3 years, this percentage here was in that press release, showing how many new investors are recruited via this simple process. And also interesting, related to the wealth transfer and other challenges, on average, the average user of this service is 1 generation younger than the existing investors at KBC. So this makes the children of Mr. Dumont start to invest without even having to inherit his money. Maybe the trade is a way to get to know your investment proposition. So these are two numbers, again, which are stable across the different markets at KBC where we have launched this. And is an example of how to get people over that wall. 50% of them that jump for the first time. And when you look at them, once they are over the wall, you can simply observe, oh, there's 1 generation younger than the ones that I meet in the office for the portfolio overview. So an inspirational use case, hopefully. And then to conclude, another one, which is a challenge in its own. It's the risk profiling exercise. And that's also very much connected to the retail investment strategy, because even though the regulation that will come out of it is not final, it's pretty sure, or it looks like there will be more touch points than today where some kind of risk assessment of your investor will be required. So if you need a manual or a human assisted process to comply with this, most likely multiple of touch points where you have to do it, then it will make your costs explode. So that's one argument where you could say, well, let's try to turn this into something more engaging, and to say that it is easy, personal, valuable, and reliable, the 4 pillars of our internal strategy at KBC as well. Everything we do has to be compliant with those 4 must-win battles. And we have built an expertise and an experience in this that goes beyond MiFID, in the sense that we have a solution for this risk profiling to meet the regulatory compliance, but in a way that it generates data which are commercially valuable way beyond investing or MiFID as such. So very briefly, we have tested this in multiple markets, most recently in France, Italy, and UK, where in each of these 3 cases, more than 5,000 people went through the solution that we have developed for this, which is a model-based, but crucially not AI, to generate data on what drives their decision-making under risk. So it generates the MiFID required data points, which is good if you indeed intend to give investment advice, but it generates more data which, for example, could be used to improve the risk awareness of the people, so getting them prepared to jump over that wall, so to speak. So it's a pre-onboarding exercise as well, and as said, it gives you a head start because the generated data do qualify as suitability inputs. In Italy particularly, we asked some questions on the participants whether they, after completing this exercise on risk profiling, whether they would be willing to share those data with their financial service provider if that would be asked. And there was a vast majority of 85% who said, yes, of course, because I just spent 2 minutes of my time on it. So that's why for this solution, being a MiFID-like profiler, we are now more and more talking to people that have marketing departments who are craving for data, in this case generated by the client, with consent to use in direct marketing and so on. In France, where we started these large survey panels, we did a comparison. We asked every of these 5,000 people to complete a conventional profile with a questionnaire-based approach, and ours, asking them then which one they preferred in terms of criteria. Did you like it? Did you think it was insightful and so on, which gave a majority vote for the more interactive, contemporary approach. And then, of course, it does also comply with the MiFID regulation, making it future-proof, let's say, from a compliance but also IT point of view. And that's why we don't shy away from external validation. We have invited ourselves, and were allowed to present this to in total already 13 supervisory authorities across Europe. We are certified by Deloitte. I don't know the abbreviation by heart what they exactly stand for, but ISO 27001 is of course very well known, and that was something also attained recently. So I don't make this a sales pitch, but just to show there's more than MiFID. We can make MiFID much more than a boring legal must do. And I hope to have pointed out some opportunities. So if you want to reach out, feel free to do so, and I'm happy to take any questions now or in the panel. Thank you.